Hi there, Dennis Wells here with the Financial Advantage podcast. I'm privileged to interview Mark Machnic, who owns Mark Machnic CPA in Highland. He's a CPA that I use, and just to be honest, Mark, every time I talk with you, I feel like I make money. So I'm really excited
Good,
to get a chance to interview you here today, and I know people listening to this are going to get a lot of value out of this as well.
good. Yeah, I'm looking forward to it.
Cool, cool, very good. So let's talk a little bit about your journey becoming a CPA. What
Sure.
how did that come about, and then how did you open up your own business?
I think it all came about. I got pretty lucky when I was in high school. My path was going to be I was going to be a steel worker and work at the steel mill. So, but when I was graduating from high school, they started having a bunch of layoffs and all that. And I had a baseball scholarship offer from St. Joe's College down in Rensselaer. Um, so I went down there. I started out my first year, I was taking mainly computer science classes to be a computer science major. And then I think my second year, my mom kind of convinced me to go into accounting. So, that's kind of where my journey started. So I graduated there in accounting. Um, my first job was as an auditor with a firm out of Palos Heights, Illinois. And I stayed there I think I was there about a year doing audits, all over the country. I was traveling, and then after the year, I got a job with a sort of a local firm around here. Spent probably, geez, 5, 7 years there. Again in auditing, so that was kind of my base. Then I kind of left the industry for about 10 years, and I went into the insurance field, doing
Okay,
commercial insurance with a friend of mine. Did that till probably around 2007, and then I started on my own.
okay,
Got out of the insurance and just started from square one.
very cool, very cool.
Yeah,
Um, I know when a lot of people hear CPA, they're thinking income tax returns and those kinds of things, which obviously you and your firm do that
right.
as well. What are some other things that other services you all provide that people might not be as familiar with?
Yeah, on a daily, weekly, monthly basis, we do a lot of bookkeeping for our clients. We do a lot of payrolls, payroll taxes, W-2s. I specialize in business valuations. I'm certified to do those. I do forensic accounting. I do business exit planning. And then I just got another designation as a tax advisor focusing on small business tax advice.
Okay.
So, of course, January, February, March, April, we're swamped with tax returns. Um, and then the rest of the year, we focus on other things like the valuations. A lot of the valuations are divorce or estate planning valuations or
Okay.
partner buy-ins, partner buyouts. So
Okay.
yeah, that keeps us busy during the year, and that's kind of what my focus is.
Cool. So what is forensic accounting?
Forensic accounting, well, it, I've done various engagements in forensic accounting. I've done them from one spouse thinking another spouse is hiding money doing it during a divorce. So it's
Okay.
basically getting all the records and it's tracing the
Okay.
funds coming in, the funds going out, where they're going. Um, I've done forensic accounting on a employee theft one, where an
Okay.
employee, embezzled over $1 million from their employer. Um,
Wow.
so it's been like that. What other? Oh, I had an attorney that embezzled millions from a client. Um, that was one of my first engagements. That attorney, I believe, spent 7 or 9 years incarcerated because of that.
Wow.
So yeah, it's not just the divorce work. A lot of times it expands, and
Sure.
sometimes it's not. Someone doesn't think someone's stealing money like an employer, but they just want someone to come in and take a look and give them
Okay.
peace of mind.
Okay.
So yeah, so that's kind of the forensic accounting, and but a lot of it's for divorce purposes.
Okay. Okay. Very cool. So what are some common financial or tax mistakes that you see people make on a regular basis?
The mistakes, like I was doing one today, reviewing a new client's tax return from last year that they prepared by themselves. And, something as little as they didn't take a deduction on their state tax return for property taxes paid.
Okay.
Every little bit helps, but, it's stuff like that. A lot of people like to prepare their own, but, there's a lot of, the tax laws are always changing. There's
Hmm.
a lot of deductions that come and a lot of deductions that go, or deductions get limited. So, and by doing their tax return, I could kind of see where they're at, and it turns into a good tax planning opportunity. Um, like the 529 plans, Indiana
Hmm.
gives you a credit. It's 20% of $7,500. I had a guy in the other day, had three girls in college, didn't even know about the 529
Yep.
plan. So, that saved him $1,500 right there, him contributing to the plan.
Yep.
So, it's stuff like that. A few other things are, you know, filing status. Am I married, filing joint? Am I married, filing separate? Am I head of household? Just kind of explain, the different criteria you have to meet to be classified as one of those.
Okay.
So, yeah. So a lot of questions on that. So what we'd like to do with our clients every year is we do like a tax questionnaire,
Hmm.
and they kind of fill out, check some answers, fill in some blanks, and that kind of gives us a good picture of maybe some stuff we need to elaborate on with them.
Okay.
So, and we try to send out, emails periodically, every couple of months to our clients, just trying to keep them updated on things that are going on, and, some stuff that might affect them. Like we have a new, as of yesterday, this Corporate Transparency Act. They just came out with that anyone who has an entity that was kind of formed through the Secretary of State, you have to file a report by the end of this year, giving some information about anyone who owns 25% or more of the business. Um, that's new this year, and failure to file is a $500 a day penalty plus up to 2 years in prison. So, we're getting a blast out to all our clients about that one, seeing if they need assistance on that. So
Okay.
a lot of our work is keeping our clients up to date on, different compliance issues or tax laws changes.
Yeah. I'd actually seen short videos on social media about that, and I was like, oh,
Right.
we did the LLC, a little over a year ago, and like, yeah, that's something we need to have that conversation about for sure.
You'll be getting an email from me.
No, love it. That is awesome.
Yeah.
Um, what are some things that looking forward into 2024 that people can do to, you know, maximize the advantages that may be there under the tax code?
Yeah. I mean, one of the main things that is like one of the best investments in, a tax deduction for someone is if you have a high deductible insurance plan, opening up an HSA. I mean, that's for 2024, you could put in $4,150 per single person. And if you're over 55, you have $1,000 kicker to
Okay.
max out. So a couple could put in over $10,000, and that comes right off of your income.
Hmm.
And what a lot of people are doing is they don't even use that for their medical; they just let it ride.
Hmm.
And it basically could either turn into like an IRA, you can invest it, and then it's not a lose it thing. I mean, 10 years down the road, you could start taking money out, reimbursing yourself for expenses you have today. So
Okay.
that's a great investment vehicle for people, and with a lot of tax advantages. It's a tax write off. The funds accumulate tax free. You pull them out, they're tax free. So that's one of our good our tax planning strategies. And then there's a lot for like business owners. If you have kids in the business that are under 18 years old, you could pay them up to the standard deduction, and they won't have to file a tax return for federal, which is, I
Okay.
believe, 14,600 in 2024. So
Okay.
we use that with a lot of our business owner clients, and then board meetings, and just taking advantage of the tax code to lower their tax burden.
Sure.
Yeah.
Yeah, very good. We were actually with our health insurance last year, they didn't have an HSA plan, but they
Uh-huh.
do this year. So I was,
Yeah.
excited to see that, and you're obviously then balancing, do we have any big tests coming up and those kinds of things? Or,
Right.
yeah, we can take that money tax free, spend it on medical, or like you're saying, just, let it ride and let it grow and be another extension of your retirement plan.
Exactly. Exactly. And then a lot of these plans too, if you get like $10,000 or more in them, they let you invest in stocks, and you could self-direct them, invest in real estate, crypto, you know, everything. So they're really yeah, I know someone who bought some rental property with his HSA.
Really?
So, yeah. So there's a lot of things you could do with them that are
Nice.
outside of Wall Street.
Yeah, no, absolutely.
Yeah.
Um, well, cool. So, in your experience, expertise, what role does financial education and continual learning play in wealth creation and
Oh my God.
preservation?
Yeah, I mean that's the whole key. I mean, I have what 24 letters after my name, and I'm still getting designations, and
Yep,
it's not for the letters, it's for the education, to
yep.
keep my clients abreast of, how to help them and keep them abreast of what's going on. Um, I do a lot of continuing education. I do it online. This summer I was in Salt Lake City. The fall I was in Las Vegas, and then I was in Phoenix a couple weeks ago. So I'm glad these continuing ed seminars are live again,
Hmm.
because then I make a lot of good contacts. So I work with people all over the country, work with a lot of advisors, financial advisors. Um, but yeah, like I even tell my kids, especially my daughter, I'm like, you just gotta constantly keep learning. I mean,
Yep.
that's your one way, because that's your one thing to get ahead of people, is just be an expert in your field. And it's so easy now with podcasts and
Hmm.
ebooks and webinars that I read like crazy. I probably read a book every week or two,
Okay,
and I,
cool.
I focus on business books and tax books and entity structures, and just how I can help out my clients.
No, I love it. Cool. So, what advice would you have for small business owners or entrepreneurs looking to manage their finances and grow their business?
I think the biggest advice is from the beginning is just stay organized.
Hmm,
Whether that's using QuickBooks, using a spreadsheet, because you got to know where you're at, where you start, so you can get to where you want to end. So
sure.
that's why we do a lot of valuations for businesses. Someone could be saying, "I'm going to retire in 5 years. I want to be here," but then we got to find out, okay, where are you right now?
Right.
And then we look at things when we meet with our clients. How to grow their business. Whether it be changing some of your clients to monthly clients, reoccurring
Hmm.
revenue. Because in my view, the two biggest factors that kind of dictate the value of a business are cash flow and risk. So obviously,
Okay.
you want to increase your cash flow, reduce your risk. At the end of the day, when you go sell, you want to hand them the book and say, "Here, it's yours." It's
Right.
self-running.
Right.
So there's a lot of things. Making sure if you have employees in your business, that your business isn't totally reliable on you.
Hmm.
That
Okay.
kind of lowers the value, because if you're gone, someone buying it would be afraid,
Right.
that the clients may leave. So, we work with clients to kind of diminish the the dependence on the owner,
Hmm.
and just a lot of other strategies depending on what the business is in. But it's always like you got to find a niche. You have
Right.
to And that's what I kind of tell the business owners, you could be a carpenter doing this, but if you're the only one doing this, in any business,
Right.
like a lawyer, it's rare to find a lawyer that specializes in everything. They find
Right.
their niche and that's what they go after.
Right.
I think
Right.
that's important. You can't know everything, but you just need to know enough about some things to refer it here, refer it there.
Hmm.
So I use a lot of people that I refer things to. So yeah, have a strong network.
Yeah. Yeah, absolutely. And as you were talking about the, less dependent upon the owner, the other
Yeah,
benefit is, you know, you can go on vacation, or you can, maybe get sick for a couple of days, hopefully not much longer than that, and the business doesn't fall apart because,
exactly.
everybody knows what they're supposed to be doing. So,
Right. Like in our office, we have some standard operating procedures. We
hmm
know what to do when someone comes in and brings their tax return. It goes all through the chain.
yeah.
So, we follow the same procedures all the time. So we just try to streamline it just in case, something happens, someone's out of the office, it just still goes smooth.
Okay.
Yeah.
What businesses do you think are best set up for someone to be able to turn around and sell it kind of as a turnkey business?
Very interesting question. Accounting's good. It's a business. The best businesses are the ones that have the recurring revenue, the
Okay.
monthly revenue. Like we have, a few hundred monthly clients that pay us every single month. So someone looking to buy a business is, looking at cash flow.
Yep.
What, so if they're coming in with steady cash flow, that's a big selling point. You could have two clients. One could, pay you 12,000 a year. One can pay you $1,000 a month. The one paying you $1,000 a month is worth more than the $12,000 a year just because you're getting it every single month.
hmm
So, and that's how we try to structure some of our clients' businesses. We look for like heating and air people who do, service maintenance agreements.
Okay.
Perfect example. A lot of times they'll value a business based on just the service agreement contracts because someone
Okay.
coming in knows they're going to get that every single month.
Okay.
So, and then the ones that are less risky, if I've done businesses where, they have one supplier. Well, if that supplier goes out of business, what are you going to do? You know, or
Right.
I had a business that rented at the mall and part of the contract was they can pull the lease at any time. Well, who's going to go in and buy that business to be in the mall when they could lose it the next day?
Right.
So,
Right.
just a lot of things to think about. Yeah.
Yeah. No, very, very good. And it probably varies business to business, but what kind of evaluation do you put on something when they have that kind of steady stream of income?
You put a premium on it. You
Okay.
could have a business that, say, the rule of thumb is it sells like one times its revenue.
Okay.
But if they have this monthly reoccurring and all these other things, not depending on the owner, you can go up 25%, 35%.
Okay.
So there's a good premium on it. And the same thing, if it's just the opposite, you can go down. That one at the mall, I went down 65% of the value, you know,
Wow.
because there's too much risk involved,
Right.
you know. Or if there's a business that anyone can do, like I've had contractors that say, I want to sell my business and they just did basic remodeling. I'm like, what's it worth? you
Right.
know,
Right. Right.
if anyone can do it and there's no barriers to the entry,
Yep.
you know, so that's kind of like, so if someone wants to like sell a business or, we like to do like a 3 to 5 years out. So that way we can make adjustments and, get that value up,
Okay.
you know, like and some businesses are funny, like some computer software ones, some SaaS businesses, sometimes they'll sell for 7 times top revenue, top line, just the money they're bringing in. So, it'd be like in my business, like say I sell for 1.5 times top line. If I bring someone in pay them 100 grand, they bring in 100 grand. I've netted zero, but increased the value of my business 150 grand based on their
Wow.
rule of thumb. So
Wow.
we kind of dig into the numbers a little more than that.
Yeah. No, that's awesome.
And on the
Um,
business values too. I mean, the values are different based on what the purpose is.
mhm.
Are you selling to a competitor? Well, a competitor might pay a little more for your business, A, to get you out of business, and B, to get your clients, whereas someone off the street might not see that extra value.
Mhm.
So there's a lot of, that's one of the first things we ask is, what's the purpose of the valuation? And then we know, okay, do you have a buyer in mind? Is it going to the open market?
Mhm.
So yeah,
Cool.
so it's an interesting field, and it seems like this past year we did an awful lot of valuation. So I don't know if it's the baby boomers, getting
Mhm.
ready, and a lot of them were for estate purposes. They want to give some shares of stock of their company to their children. So we need to know what the value is.
Okay.
So yeah, it just seemed to be that last year was the most I've ever done in one year.
Okay.
So yeah, so it's a good field. And the field, it's a great field to get into. Um, Seems to be a tough one for people because it's a 5-year degree now to
Okay.
to do it.
Right.
So it's tough to get those people to go that extra year, but I think it could be worth it for people to do it. It's a wide open field these days. A lot of it's an older field, so a lot of people are retiring.
Mhm.
So yeah, there's a lot of opportunities.
Yeah. So it sounds like that extra year is that barrier of entry to kind of
Yeah,
protect.
exactly.
Yeah.
So,
Yeah, very cool. So you're talking about your network. So you work with, I'm assuming estate planners,
right.
attorneys, financial advisors.
Yep, exactly. My my main referral sources, it's kind of turning a little bit now. My main referral source right now are financial advisors,
Okay.
where before it was attorneys.
Okay.
Now the financial advisors are looking more into estate planning these days. So I work with a lot of advisors, and the advisors don't do any of the tax work. So I do a lot of tax planning with advisors and their clients.
Okay.
Um, I still have a network with attorneys for divorce attorneys, and then estate and trust attorneys. So those are my two main referral sources, and then other CPAs, yourself, you
Sure.
know, people like that. So yeah, I mean, I really don't advertise that much anymore. It's just kind of
Hmm.
word of mouth,
Hmm.
and I sit on some boards of. I'm on the board of Humane Indiana. Been on the board for a while there. For the nonprofit. So
Hmm.
uh, some attorneys are on the board. So we get a lot of good business, and yeah, I really enjoy the estate valuations because it's a whole process where divorce. It's like here it is, then there's divorce, but with the estate, you're working it until the person decides to retire and gift those shares of
Hmm.
stock.
Okay.
So it's an ongoing engagement, and that's what I prefer.
Yeah. Well, and I would imagine there's a lot of satisfaction in sitting down with someone, helping them chart that course, and
Right.
then seeing them get there. For sure.
Exactly. Yeah, because a lot of times when I would do the divorce work, I never would know what would happen. I give them my report and then I never hear anything. But that's why I'm saying like with the estate stuff, I just like working with the attorneys, and even I have a lot of attorney clients that
Hmm.
I do tax work for, and I just picked up two really good ones, and the way they were doing things before. One of them this past year, I saved him right under 50 grand in taxes in one year, and the other one
Wow.
was close to 100. Multiply that by 10, that's $1 million savings. So
Yeah.
he was quite pleased.
Yeah. And you don't charge anywhere near $1 million. So
No,
he's got a huge return on the investment for sure.
he really did. But it's a great he's a great guy, he's a great referral source, and I think we're going to do a lot of business.
Yeah.
He's an estate attorney too, so Yeah. That's the
Yeah.
main thing is just, helping them out. I was always the guy, I didn't want the one client paying me 10 grand. I wanted the 10 clients paying me 1,000 because I
Yeah.
just wanted to spread out and branch out and help more people.
Yep.
So it's kind
Yeah.
of the philosophy. And we have there's like 6 of us that work here.
Okay.
So and the others mainly specialize in tax and bookkeeping and payroll.
Yeah. Yeah.
Yep.
Well, and being in the mortgage world, there's, a lot of people like, well, I just want to get a loan to get the house. It's like,
Right.
well, that's okay, but you know, you, I'm always wanting to make sure that your home financing decision is in line with your, the, what you're trying to accomplish in other areas, whether it is your financial planning, making sure that, you're not overpaying on your taxes, that that you have a plan for, what's going to happen, eventually, we're all going to pass on. So what's going to happen at
Yeah.
that point, and making sure that, you're not in a situation where, unfortunately, I get those calls from time to time that, oh, my loved one passed away, but he didn't have a will and he's got this house, and now what do I do?
Yeah.
And
Yeah. Exactly. That's a great point too, Dennis. You just have to you got to look at the whole picture. It's not just okay, here's the tax return. Like this year on our tax questionnaire, we added a page. Do you have a will? Do you have a
Mhm.
trust? Do you have life insurance? We can have someone, look at it. Because we're really emphasizing this year asset protection, making
Mm.
sure everything's titled correct for people. Is your house in your trust? Is your business in your trust? Is everything titled right?
Mhm.
I've had people that, yeah, I have a trust, but there's nothing in it. Well, that doesn't help. Or, I have an
Right,
LLC, but I never put the property in it. Well, that doesn't help either.
right.
So, we're just really focusing on making sure our clients' assets are protected. And that's how we're working with attorneys and financial advisors. So we have a lot of collaboration, meetings together. There'll
Mhm.
be me, the trust attorney, the financial advisor, and the client, and then we just work together.
Nice, nice.
Yeah.
Um, so how do you think the landscape with personal finance and wealth management is going to be changing in the future, and what should we be prepared for?
What I've been seeing lately, and I'm like, again, I don't know if it's the baby boomers or what, but people are really being more active with
Mhm.
their finances and making sure they're protected. They're paying the least amount of taxes, making sure they're diversified. Or, before we used to do hardly any tax planning engagements. And probably this year we averaged maybe 3, 4 a day in October, November, December. It was
Okay.
nonstop.
Yeah.
So I think, people are starting to realize, hey, I'm going to retire one day.
Mhm.
What do I need to do?
Mhm.
Starting now to get there. What do I need to do with my business to get it to a point that's because I think the statistics are like 95% of businesses don't sell, they just shut down because there's
Wow.
no succession planning. So, I've seen businesses where I say, hey, that's a great business. And I did evaluation, a quick story before someone um he had a personal service firm and I was valued it at about $450,000. And before we finished completely, he passed away. Um, didn't have a will, didn't have a trust. Ended up probably 9 months later, it went to probate. The $450,000 business sold for $5,000.
Wow.
Lost all the customers and
Mhm.
that. So I tell that story a lot to people. Is like the planning and the title of the assets is very important.
Yeah.
So, but I think investment wise, people are looking to retire. They're starting to like realize it's going to come one day. Let's do it
Right.
now.
Right.
So, the younger ones are they're still getting there, but
Mhm.
the middle aged to older are really putting their foot on the gas pedal and start saving and allocating stuff for retirement.
Yeah. Yeah. Absolutely.
Yeah.
Well, cool. Would you recommend any books, resources, or tools that would be valuable for an individual looking to learn more about financial planning, wealth management, asset protection?
There's a lot of great podcasts out there. That's where I get most of my financial planning. I'm I really like Mark Kohler.
Okay.
He is a lawyer and a CPA. Um, he has some great podcasts, some great YouTube videos. He's written some books. I went to two of his continuing ed seminars this year,
Okay.
and and he's not in the box. He thinks of other things. And then his partner Matt Sorensen is they're big on the self-directed IRAs.
Okay.
So those um, I really learn a lot. I listen to their podcast every day or whenever they update it. But
Hmm.
that's a good resource. Um, because they're on the individual side, the business side. Um, so I've learned a lot from them.
Okay.
Yeah,
Yeah. Well, for someone who's not familiar with a self-directed IRA,
yeah.
um, give us a little overview on what that is and how it works.
Well, it's basically, you have your IRA, like your normal IRA, you give it to your broker, they invest in
Hmm.
mutual funds and, whatever. But if you have a self-directed, I mean, you could invest in crypto, you can invest in real estate, like if you have a Roth IRA and you buy real estate, everything goes in there, all your expenses come out, and then when you sell it, it's a tax-free exchange.
Wow.
So, yeah, and it's just there's rules to to not disqualify it. Like if I have a rental property, like I can't live in it, my son can't live in it, but you just got to
Yeah.
follow a couple rules. Yeah, like I said, I had to someone buy one through their HSA, and just do some people do money lending out of their Roth, a
Okay.
self-directed IRA. They buy crypto, they buy precious metals, they buy other businesses. There's just a lot of things you could do. And the one I'm talking about, Matt Sorensen, he actually wrote a book called The Self-Directed IRA, and I've read that a couple of times. And
Nice.
just for someone who wants to do some alternative assets,
Yeah.
something other than just your stocks and bonds. I mean, it's an addition to, I wouldn't say put everything in your Roth IRA, and you know, it's just one way to diversify.
Yeah. No, I love it.
Yeah, yeah, it's a good planning strategy, and they keep increasing the amount you could put into your Roths, and
Hmm.
yeah, it's nice to and that's a strategy a lot of people are doing now. They're converting their traditionals into Roths now, paying the
Okay.
taxes. Because we know right now what the tax rates are. Who knows where they're going to be in a few years?
Right.
Like the estate tax is supposed to go sunset or get cut in half at the end of 2025. Right now, at the end of last year, it was like 12.92 million. Now it's above 13. And then they're talking like 2026, it's going to go to like 6 million or something. So there's
Okay.
a lot of planning opportunities with someone with an estate above, 6 million right now.
Yeah.
So, yeah. So that's what we've been doing a lot of.
Yeah. Excellent. Excellent.
It's always continuous. There's always something that's nothing's the same every day.
Right. Right. Well, it emphasizes the continual learning. It's like,
Yeah,
you have
exactly.
to keep in front of it for sure.
Yeah, and there's people now looking to buy businesses, looking to sell businesses. So we help with that transaction on the valuation side. If someone's buying a business, we can say, hey, send us over the tax returns, the financials. We'll look at them and kind of give you some advice if we think that's a fair price, or we'll help them negotiate how it's going to be sold.
Sure.
Is it all at once? Is it X amount down? Are you staying on for an earnout? So we help our clients through the whole process.
Very good. Very
Yeah.
good.
Yeah.
Well, hey, is there any question that I should have asked you, but I didn't?
No, I mean, I think you got it all. And I've talked to a couple college kids that have come in to talk to me and kind of asking me the same thing about, the industry, what I do. And it's always good. There's some places where you can get jobs like accounting firms where, you spend 3 months in tax, you spend 3 months in audit, and then
Hmm.
you do financial advising, and that's a great path. Because you kind of want to learn every aspect, and then,
Hmm.
or all you can, and then when you get to that point where you're confident you want to go, you're on your own, and then you get your niche
Right.
after you learn as much as possible as you can.
Yeah, absolutely.
Yeah.
Now, if someone wanted to reach out and get in touch with you and your team, what would be the best way for them to do that?
Email,
Okay.
email or LinkedIn,
Okay.
either one. Yep. Yeah.
Cool.
Yeah, pretty active on LinkedIn. Always try to return my emails. Call me.
All right.
I'm right here in Highland on Kennedy Avenue. Always available. Or even you can go onto my website and you can contact me through there.
Cool. Cool.
So
Very
always
good.
always looking to help clients, or if there's someone in college or thinking about going to college to be in accounting or something, love to spend the time talking to them and trying to show them all the, like you said, it's not all just tax work anymore.
Right. Right.
Just
Yeah.
all the various things you could do. And another thing that's pretty interesting, we do a lot of litigation work, with
Okay.
attorneys in court, and some people like it, some people don't. You know, it's interesting.
Yeah. Yeah.
So it's kind
Now
of
do
a
you
wide
get
open field.
now do you get called on to testify
Oh
very
yeah,
often? Okay.
yep, yeah. I've gotten mainly in divorce cases, but that employee theft one
Okay.
that went to court. So yeah, a lot of times it'll be like a mediation, not in court, but
Hmm.
with a mediator and the attorneys. That's how you want to hopefully settle it.
Right. Right.
So a lot of good attorneys out there, a lot of good mediators in our
Yeah.
area.
Cool. Very good. Well, thank you so much for taking the
Sure,
time to talk today. And
you got
yeah,
it.
hop on the web, go to Mark's website, get
Yeah,
connected. I mean, literally, again, every time I've talked to you, I've made money. So, and it's that I'm not being facetious. It's true. Like the whole 529 thing, that was totally us. So, last
yeah,
year and then this year as well. So,
yeah. I enjoyed. I appreciate you having me on, and yeah, the website's machniccpa.com. And
okay.
then, like I said, we're in Highland. Give me a call, shoot me an email.
All right.
Always
Sounds
looking to
good.
help. All
Awesome.
right.
And of course, if y'all know anybody that needs to buy, sell, or refinance real estate, we'd love to count on you to reach out to us as well. It's wellsfundinggroup.com, and our number is 219-230-8400. Mark, thanks again, my friend.
Thanks, Dennis. Good seeing you.
All right, good to see
Take
you.
care. Bye
You
bye.
too. Bye-bye.